Hey everyone, welcome to this episode of Money Moves. First, I want to talk about the falling commodity prices. Then we'll take a look at the charts that show us exactly what's going on. And then I'll go over each of my investing accounts, starting with Worthy Bonds, Groundfloor, Fundrise, my TSP account, which looks significantly different now, my M1 account, and we'll take a quick look at my options portfolio. And then we'll finish up with my monthly tracker. And of course, there will be some jelly at the end, which is something I enjoyed outside of the markets. If you like trading stocks and options and making money, definitely like and subscribe. I make videos like this as well as individual stock reviews every single week, so make sure you hit the bell so you don't miss out on any future content. Welcome to the Portfolio Bulletin. Let's get started. So commodity prices have finally started to fall a little bit, and this is generally due to the fact that people think the economy is going to slow down, which generally reduces demand across all commodities, and that's finally what we're starting to see. They say prices of commodities like oil, wheat, and copper are starting to slide due to recession concerns. They say in theory because a weaker economy starts to reduce demand. Fears of a global recession have started to eclipse the idea that inflation is going to drive these prices up forever, and this could potentially be the killer that we need for inflation. As demand goes down, inflation cannot continue to rise, especially in the face of higher interest rates. It seems like this could start to be that catalyst that we need to reduce inflation, which could cause the Fed to slow down their rate hikes and maybe give the stock market some breathing room. They say there's still concerns of a hard landing and what that would mean for demand, which, as we just talked about, would continue to drive down demand, which is what we're seeing in prices right now. They say we're seeing weaker demand across commodities broadly because the global growth of the economy is slowing. They say U.S. output of oil has risen, causing high prices to stall, with Brent crude selling off 6.5% in June. It's important to note that oil prices are starting to go down because this obviously drives the cost for the rest of the economy. As shipping costs go up due to gas prices, that causes inflation to look a little bit bigger than it necessarily would be. So if you take oil prices and drop those down, as well as reducing demand, that could be a 1-2 punch that starts to drive down inflation, which causes the Fed to rethink their strategy. Also worth noting here that Russia finally defaulted on their debt, missing $100 million in payments in foreign currencies, which is the first time they've defaulted on their debt since 1917. So let's take a look at what that price action looks like. This is the daily chart. Going back to just before the start of the year in December, you can see we had a little bit of a bottoming pattern before we had this massive rally in the inflation that we've been seeing here recently, before this pretty big sell-off we've had so far in June. So from June 8th was the high, and currently we're sitting about 15% lower on the Bloomberg Commodities Index, or DJP. Looking at this more broadly, we're still significantly more elevated than we were, say, pre-COVID. Of course, COVID is going to cause some strain on those supply chains, and we should expect that it's going to be a little bit more expensive. But if this continues to fall through, the next level of support, at least in the short term, would be closer to $30 on this index, which again would be about another 13 to 15% lower than we are right now, which certainly should spell some softening in the inflation numbers. I don't think this is going to happen in a straight shot, however. You can see the MACD is starting to slow down, but there's still some pretty significant downward momentum, even after this pretty large sell-off. Looking at prices on a more historical basis, you can see we're actually in line with some of the prices we've seen further back in the 2014s, pretty similar in price to what we saw during the financial crisis. So prices were higher after the financial crisis. Prices were lower from about 2014 all the way until 2022. And now we're finally seeing a sell-off back into that lower range. Moving over to my investments, starting with Worthy Bonds. I haven't touched this and I don't plan to. It is losing a little bit of money to inflation right now, but this is my second level of reserve capital. In case I get into any kind of emergency situations, I want to have this money available, and this is fully liquid, and you can see it generates cash on a daily basis. Moving over here to Groundfloor, I continue to build up this account, trying to get it to that $10,000 level here in the next month or two, but you can see I continue to generate good returns, a little bit over 10%, and I'm expected to earn at least another $600 on the loans that I've invested in so far. Looking at the notes, you can see I invested a little bit more in some higher yield notes, so these 14.5% notes, only 5 of them for $100, but I'm dipping my toe into these a little bit higher yielding notes. Should also note that if you have some big money to move into Groundfloor, they're offering some bonuses. This is definitely more money than I plan to put in here in the short term, but if you have this kind of money, it might be worth it to get a couple hundred extra dollars. Moving over here to Fundrise, we finally got the appreciation value for Q2 of 2022, and it turned out pretty good. I wish you could zoom in on this so you could see the dollar values a little bit better, but you can go over here to account details, and if you hit on actual growth, you can see going from June, it was at 43,000 for real estate investments, and then it jumped up to 44,800. So a jump of over $1,000. Closer to $1,500 was my appreciation for Q2. And you can go in here to performance and see what that looks like. So if you remember the last time I talked about Fundrise, these were generally closer to like 1 or 2% for all of these REITs that have higher returns now. So like this 8% was definitely not like that before, as well as this 4%, and then 5% was definitely lower before as well. You can see we did have a negative one here in development, so there is a chance to lose some money. I know Fundrise always seems like it goes straight up, but not always. And then we had a 6% here, so this was definitely lower, closer to that 1.5%. But you can see now there's a couple higher numbers in here, and then Q3 just started, so these are all zeros still so far. Otherwise, Fundrise is still a big piece of my portfolio, and I will be doing another update to Fundrise. They've added some new benefits if you share this with your friends, so if you haven't joined Fundrise yet, you should. Definitely use the link in the description to get $50 extra. But the big thing worth noting here is going over to Newsfeed. They are launching the Fundrise Innovation Fund. They say it's under IPO update. I'm not sure why that is, but I will go over this in significantly more detail in a future video. Moving over to TSP, or my retirement account. Materially, nothing has changed with this account, so the way that they do investing is still the same, but the way that they show it is different now. So you can see the balance here, just over 76,000, return year to date, down 5%. You can see that this only started here in May of 2000 at 0% because this all came out, because this TSP update just came out. And once these start to fill out, you can see your actual returns. But otherwise, going back to investments here, you can see how it's done by percentage. So 6% cash. They call it cash, but this is actually government bonds, then corporate bonds, and then stocks. So I did move some of my money from government bonds and corporate bonds into stocks, because I think stocks are getting a little bit undervalued based on current market conditions. And either way, buying stock now versus buying stock when it was significantly more expensive is better for me, especially for these long-term buy and hold accounts. If stocks continue to go down maybe another 10 or 20% from current prices, I'll probably sell out of all of these bonds and put it 100% into stocks. And hopefully we get a market rally sometime in the future, and all of these will go up in value. And then I'll probably move some money back into government and corporate bonds. Moving over to my M1 account, you can see my overall is back into the green with a little bit of a market gain here. I've definitely been adding money into this account. As the market continues to dip, I try to buy only on days that are down, which seems to be helping at least a little bit. But looking at the 1 month view, you can see we're still down overall with a loss of almost $800, but some pretty decent dividends over in the last month, a little bit over $100, which is pretty cool. Looking at each of the individual holdings, basically everything is down over the last month except for my individual stocks, which is pretty cool. Otherwise, looking at overall, though, you can see real estate down quite a bit, Vanguard growth down. Basically, this is very similar to the Qs, so definitely down. Bonds down slightly, and then my individual stocks are also down quite a bit. Moving over to my Tastyworks account, or my main trading accounts, you can see I've left my IRA basically untouched for a while now. I'm not super confident trading in these markets right now in terms of direction. So you can see I've only lost $100 year to date in this account, which is pretty good compared to the rest of the markets. But my individual account has definitely suffered, especially because my main trading vehicle is the NASDAQ. Moving over to my monthly tracker, you can see everything continues to trend down except for real estate. Fundrise continues to do really well, and as I add money into there, it's not really losing any value, just a little bit in that one fund, so real estate is doing well. You can see my trading account went down with the rest of the markets. My buy and hold stocks went down slightly less because I did sell some bonds and buy some stocks in my long-term retirement account. And then everything else is basically flat or trending down. So you can see bonds went down because I did sell some to buy stock. Cash basically flat. It'll go down a little bit as I reinvest some of that capital over the next 2 weeks. And then you can see Lending Club trending down almost off of this charts. Maybe in the next month or two, it'll be all the way off the charts. And you can see the percentages here. So sold some bonds as well as a downtrending market. Stocks are down, real estate up a little bit, Lending Club down as I sell out, cash basically flat, trading down quite a bit, and total down 3% on the month. So it's definitely been tough investing right now, but in the long term, we hope that the markets will go up and we'll make a little bit of money. Let me know down in the comment section what's going on with your investments. Have you changed your strategy at all with the current market conditions, or are you just continuing to buy and hold? Definitely like and subscribe if you got any value out of this video. Make sure you hit the bell so you don't miss out on any future videos. Of course, none of this is financial advice. This is all for entertainment purposes. And with that, let's get to today's jelly. So today's jelly is Tiny Tina's Wonderlands, which is a video game that I've been playing based on the Borderlands saga, which is an awesome series if you haven't played it. But if you're familiar with that, I'm sure you've already played all the way through Tiny Tina's, but it takes me a while to get through video games with my current schedule. And this is an awesome video game. They got some pretty high name actors to do the voiceovers, and it really feels like you're basically playing a video game with them. And the in-game dialogue is hilarious. So check out this trailer and definitely check out this video game if you're into it.
The walls of the mighty Bright Hoof and a massive skeleton army! Catapults are assaulting the city! The sky is filled with arrows and boulders and bones! Behold the horrid visage of the Banshee!
Let me know down in the comment section what you think of this video game. Good luck in your investing, and have a great day.